Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6:33 on Monday, July 25th as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, up across the board about 0.5%. As I'm starting the video here, we've got a huge week of macro and earnings on tap. Just to summarize, you can get the full detail on the blog site if you care to do that. But Wednesday, we've got the Fed announcement at 2 o'clock, followed by the presser at 2:30. Then we've got GDP on Thursday. And remember, on that GDP, we had a negative print in Q1, and GDP now from the Atlanta Fed is, either at zero or slightly negative as their prediction. So if that prints a negative number, everybody's we're in a technical recession, blah blah blah. 2 quarters in a row of GDP contraction, so everybody will be talking about that. And then on Friday, after all that, we've got the inflation numbers on Friday, along with University of Michigan sentiment. And then on the earnings front, we've got all of mega cap tech reporting. Tomorrow after the bell, we've got Google and Microsoft. Wednesday, we've got Meta after the bell. And then Thursday, we've got Apple and Amazon. So I really think after this week, we're going to have a pretty good idea if the bear market rally has concluded or there's more gas in the tank. So really a pivotal week on earnings and on macro as we head into the back half of the summer. And don't forget, there's going to be a big void after the FOMC does their announcement, because they have Jackson Hole in August, but that's not a place where they do interest rate policy. That'll be in September. So there's going to be a void in the FOMC. So the way they make that statement, whether it's full on hawkish, I think everybody's got penciled in 75 basis points. I think 100 basis points has pretty much been dismissed. But be that as it may, they're in their guidance and in their talk, they're gonna make it sound rather benign or super hawkish or somewhere in between. So we'll have to wait and see. So let's take a look at what happened on Friday. Obviously, a wobble in the market. What I've done here is on Friday, we talked about the Fibonacci retracements off of the pivot high back here in late March and the pivot low just in mid-June. And we are right up at the 38% retracement level. And you can look at the video on Friday if you're new to the channel or you forgot. But it rejected there on Friday. So, one day doesn't make a, some kind of definitive, oh, that was the rejection and now we go down. But what I will say is, it was rejected at a key spot. I think we need to get above 4,000 and 400 on the SPY, 4,000 on ES to make inroads towards 405 and then this big resistance area at 410. And I would say I don't want to see price lose the 50. To me, that's a big level. It doesn't matter on any chart that you're trading. if you go above the 50 and then come right back down and lose the 50, that's, from a technical standpoint, that is not bullish behavior. You can see here on SPY, we've got the 50 coming in at 393.50, and we reached down and tagged that on Friday, and it held. And we've also got the fast moving averages, the 8 and the 20, coming up from below, which start coming in at 390. So I think at this point, we've been talking about this being a bear market rally. So I don't think you should be, trying to talk yourself into a new bull phase. Take it for what it is. We've had, a decent bounce off the low up to the 38% retracement level. I think a break and a close above 400 would give you confidence that the rally can extend, and a loss of the 50 would give you solid evidence that the rally is fading. And certainly a move back below 390 would be further evidence. Losing these fast moving averages, the 8 and the 20, because then if price were to do that, then price would be below all the moving averages, and that's bearish. Now, could we come in, lose all those averages, back test 385 at this downtrend line and bounce? Sure. I mean, anything can happen. All I'm speaking to is probabilities and the technical posture of price and the chart, and to say you want to hold the 50, you want to hold the fast moving averages, and if it can't do that, those are going to be definitely bearish developments. And remember some of the watch points, and this is for any stock that you trade. So by all means, if you're trading, other stocks, look for this. And this is what I'm going to describe as bear market behavior. If PPO makes a rally and then flattens out at the 0 line and rolls over, that is classic bear market behavior. And if you need an example, just look back at the last occurrence. We had a rally that ultimately got rejected. We had a rally in the PPO that came up to the 0 line and then rolled over. And now this was a fast one. I mean, they dropped the bottom out of that. We got caught in that. But what I'm saying is you can learn a lot about the behavior of the market and the stock, whatever stock that you're trading, by watching these PPO profiles. Now, on this profile, it's in a better posture than here, because here we never even made it to 0, and here we're trying to inch above. Here, RSI is somewhat higher than it ever got back here. So, all things being equal, this rally is a little bit stronger than the prior one. So let's leave that there. And by all means, I think the big takeaway from this chart is watch the 50 as support. Moving on to the 60-minute chart, and this is another thing that you can carry through to all your chart work. Look at the perfect tag of this gap and the rejection. That is a common move, especially as you approach we knew this was a big resistance level to begin with. So price made a move, check mark on the technicals of filling a prior gap, and then it was rejected and came back to the bottom of the gap where it held. So today, as far as support goes, here's your 390 and your 393.50, where the 50 EMA comes in, is right in this area. And what you want to see is not only this hold, this bounce to proceed, and if the pre-market holds, the bounce is proceeding, but you want to get a breakout here at 399.50 and power through 400, and that would open the door up to 404, and then 408, 410, where these large volume over price bars come in. As we move on to the Qs, price is in a relatively stronger position than it was on SPY. Remember SPY, it reached down to tag the 50 here, did not make it that far. Here, the 50 EMA comes in. Let's just call it 298. It's actually 297.83, but 298 will give you a good number. And you can see that the 8-day is actually trying to break above the 50-day, so that's a positive development. And on the PPO, we have broken across the 0 line, so that's positive. And RSI is above the 50. So, but obviously we've got, Google and Microsoft tomorrow and all of the mega cap tech. So how those go will, in large part, decide how the Qs are going to go this week. And then as we go down to the hourly chart, we've got a good level of support here at 300. We've got I left this old gap in here from 298 down to 296. You don't want to have 296 fail. That would bring price back in to this old trading range and most likely open the door for a move down towards 290 to not only fill this gap, but come down to this large volume over price bar here and the uptrend line. IWM, there was a gap here as well, came right up to this 183 area and got rejected quite significantly, came and reached down to 178, which is right where the 50-day and this intermediate downtrend line. I think you can be long against 178, but below that, price will have lost the 50 and will have lost the 8-day and will have lost this intermediate downtrend line, and none of those things would be particularly bullish. Here you can see, again, just like in SPY, if you can see it there, that needle bar came right up to fill that gap and was smartly rejected and spent the majority of the day going down, and then found support at this 178 area, and that wasn't a coincidence. There was a prior high here. You've got a largish volume over price bar here, and you've got support here. So having these levels pre-identified on your chart can be really, really helpful. And, as far as trading on Friday, if you didn't take a shot at a short here, and I wouldn't blame you if you didn't. I mean, we've been in a relatively strong bullish trend, but when price dropped down below the bottom of the gap and below all this support here from the prior days, that was a bearish entry point. And then down here at the bottom of the flag, you wouldn't have gotten much. I mean, you could have got maybe $1.50, $2 if you were sharp, but that's the essence of, you know, two-way trading if you're gonna attempt to do that. Meta on Friday took the hit from the snap results, had a big gap down, and then there was the first bar of the day, rallied back up to this 176 level. I've put the pivot point for Meta right here at 172 because I think that's the key location. You can see all of this resistance here, and now we've dropped below it, and I think you've got to have a bearish mindset on Meta as long as it's below 172. Now, we've got earnings tomorrow, so I mean, just from a technical standpoint, we broke out of a big trading range. We made, you know, came up here for this high, and now we've dropped back into the trading range. So from a technical standpoint, that is not good, and it opens up a path, a technical path, to the bottom of the box. Now, obviously, earnings will have a lot to say about that tomorrow after the bell. It could, you know, come down here and then jump right back above, or, you know, gap down and come down towards the bottom of the box. Probably just a wait and see for now. I mean, yes, you can, if there's some kind of move today and tomorrow before earnings, you know, that's fine. You can trade it. But from the charts, I think you want to be leaning bearish as long as price is below 172, and then flip to bullish if price can emerge again after breaking out above 172. Apple, I don't know why I lost my title, but this is Apple 60-minute chart. Nice uptrend line. One of the strongest stocks in the market. Got rejected here at 156, which was an important level on the daily chart. Pulled back to this 154 area. I think you want to gear everything off of the 200 at 152 and the midpoint of this channel. As long as price is above 152 and above the 200, I think you have to be leaning bullish. If you lose 152, however, then that kind of flips the chart. You never want to lose a significant moving average. And if you lost 152, I think you're going to get a quick tag at a minimum of the bottom of the channel. Depends on when it happens. I probably wouldn't imagine, unless the market falls apart, of course, prior to earnings. But with that earnings catalyst, that could be obviously a catalyst to, you know, break it out or bring it back. Tesla, again, showing that price does have muscle memory, reached right up here to this gap that goes way back in time. Had a touch of that and then rejected and faded. The reason I have drawn the reaction arrows such as this is that 800 is support and 825 is your 200 EMA. So I think in the middle between 800 and 825, you're welcome to trade that if you like. But in terms of a longer term type outlook, if price can break back above 825 and the 200, that would put price on much firmer ground than it is here. If it drops below 800, then that opens the door to come back to this minor downtrend line. But what's more likely to happen, I would say, is to back touch this breakout at 750 by filling this gap and coming back to touch this uptrend line that I've got off of these lows, and that all comes in around between 740 and 750. So if that were to break down below 800, come down here and then have a decision point whether that trend line and support can hold or if it fails. Microsoft, bad day at the office. Had a good initial bar and then just let go down to the bottom of this little channel that I have. Really don't want to see 260, this little support zone here between 260 and 259. I think if you lose that, you can see support, resistance back here, support back here. So there's a little zone here between 259 and 260. I think if you drop below that, then you're going to roll towards 256 and potentially 253. Amazon got rejected here at 125.5 and then came back to the bottom of this support zone here at 121.50. I think that's a good pivot area for this morning. I think a breakout over 123 would be bullish with a target of 125, 125.50. If it loses 121, I think you come back to 120 and potentially all the way back to 117. Google also reacting to Snap much more significantly to the downside. You got a gap. We lost this support zone. Now that's resistance. And really, more importantly, we lost this big uptrend line off of these lows back in May. And so now, with price down here, you kind of have to lean to the bearish side. I wanted to show you on the daily chart too, because you've got a trend line break, and now price is below all the moving averages and below this value range that starts at 110. So really, to kind of get back on track, you got to recover this downtrend line, and you got to recover 110, and that would put it on firmer footing. But you can see here, it's been fading since this 118.50 area, and now we're below the trend line. So not a very positive looking chart, but we've got earnings tomorrow after the bell. So I mean, how earnings go. It could be a moonshot or a crater, or really anything could happen. Netflix held up very well on Friday, down 1.5%. Not a very good candle. So we'll have to see how the follow-up goes today. But well above the 50. You've got the 8 and 20 day moving up, and you've got PPO breaking above the 0 line. You've got RSI well above the 50, actually up towards overbought at 70. So I think Netflix remains pretty strong, and I think the door to 245 as a technical target is still intact. SMH looks a lot like some of the other charts that we've gone over. Came right up here to 230, 250 and was rejected. Found some support. I think your pivot is 227.50. I think you can be long above that and then look for 232.50. And as support, you've got the top of the old gap at 223.82. Here are some more or less what I call, bearish developments. We have been watching the ARC complex. This is the fintech one. Came right up, got above the 50. That was bullish, but ran into this wall here at 18.5 and got rejected pretty strongly there, down down 5%. So if you excuse me, if you're interested in this on the long side, you just got to realarm it there, and if the if the rally proceeds and you get that breakout there, then you can take it long. But as it stands now, no breakout, no trade. Same thing with genomics. We actually got the breakout from the downtrend line, actually made a move into this void, and then this was down, 5.5%. Still above the 50. It could come down in here, get some support at 34.5, 35 at the 50 and bounce. But really, to get the breakout going, you got to break back above 38. On flagship fund, this looks like a fake breakout. You broke out above the downtrend line and came right back down below it. Still above the 50, still above the moving averages, so that's productive. But I never like to see a breakout above a downtrend line fail like that. Does not give you a lot of confidence. If today is a positive day and it breaks out, then the indicators are still bullish above the 0 line, above the 0 line, above the 50% line. But you trade on price. So, if you're long and you held it, I think you can stay long, but have this 45 as your hard stop. If you drop below that, you'll be below the 50 and below this key technical support area. ARCW never broke out, got rejected right at the key spot. I would keep your alarms there. If you get the breakout, it's still technical long. Micron sold off with Seagate. Seagate had earnings that were unimpressive, and this moved down. We were in more or less short dated calls for this Friday, and I thought, just take it off and reset on Micron. Lows. We were long this from down here somewhere. Got a good move up here. Had nice profits on it. I did not like the fact that this was fading most of the day. So I set a stop at 195. I took my position off. I shared that with you. And we'll just have to see what it does. Now, if this were to come down into 192.50 and hold, that would be a positive development because this value area, you can see where the large volume over price bar is. If you got a move into 192.50 that held, I think you can re-enter that position and see what happens. If you decided to hold it, I mean, that's fine. Just know where your stop is and then respect it if it gets there. And since we're up on the morning, you might look smart. Just realize where your 200 is. That may pose some technical resistance if we move higher. And then wrapping up with Goldman, just like we talked about just a second ago on lows, that first touch of the 200 is often resistance. And in the case of Goldman, had a reach up candle early in the day, touched the 200, and then got rejected. If you are still in that trade, I would recalibrate around the 200. I mean, I don't know. It'll all depend on your expiration and what you're going for. But certainly, even if you're not in it, a break above the 200 that holds is going to be a long entry, with the target being 342, something like that. You can see where the high volume over price bar comes in, and that will be your next resistance point. And then above that, if things keep going, you can see the big void in the chart where things could move pretty quickly. So I think Goldman's worth paying attention to as a potential setup if things resolve bullishly this week with the Fed and all the mega cap earnings and that kind of thing. So we'll have to wait and see. Just speaking of the mega cap earnings and the Fed and inflation and GDP, expect a lot of volatility this week. So take that into consideration if you're in your trading, that literally every day this week we have an event, either mega cap earnings or FOMC, GDP, inflation. Lot of moving parts this week. So not going to tell you what to do. You may want to be careful on any short-term overnight holds because, I mean, with that volatility, you could either be looking at a zero or a windfall depending on which way it breaks. So, that'll depend on your trading style and your risk tolerance and all that kind of stuff. Usually what I do is if I'm in a short-term position, just take it off overnight and see what happens, and then pick it up the next morning. But that's just me, not telling you what to do in any way, shape, or form. So let's wrap it up there. If you're new here and you appreciate some analysis along with some objective trading levels, thank you so much for spending the time. Hit the subscribe button, the alarm bell. You'll get the YouTube content. And if you jump over in the show notes, you'll find a link to the blog site where you can add your name. We've had a couple of new members in the last couple of days, which is great. That way you'll get my content morning, noon, or night. Market observations, trade ideas, stuff like that. And you'll also get a link to our chat room where there's usually good ideas and commentary flowing all the time. A lot of stuff that I would never see guys pick up on, and girls too, that are helpful and useful. So we'd be glad to have you there. So let's wrap it up. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.